Number one is that Africa's growth continues to remain resilient. So for anyone looking for a growth pole for the world in the coming decades, Africa is the place to look. And I say this because despite all the shocks that has been buffeting the continent, from COVID-19, from Russia's war in Ukraine, from high inflationary impacts, pass-through inflationary impacts that we've had, because of the macroeconomic policy reforms that countries have implemented, fiscal consolidation policies, and other prudent monetary policies that has happened in this continent, we've been able to absorb the shocks and we're continuing to grow. But again, the other takeaway is that even though we are growing, we have consistently grown above the global average, the growth rates are not sufficient enough to pull millions of Africans out of poverty. So extreme poverty is still deepening on the continent because population growth is outpacing that growth rate that we have. So what our models are showing us is that for Africa to be able to alleviate poverty in Africa, in African countries, we need a growth rate of 7 to 10% of GDP growth sustained consistently over 40 years. And when that happens, then we'll be able to see structural transformation happening on the continent.
Now, there are growing concerns that African countries are at risk of defaulting on their debt. What is the AfDB's view on this?
Already, you have about 23 African countries that are either in high risk of debt distress or at risk of debt distress. And we have seen a number of countries who defaulted already on the continent. So we really need to engage in terms of fiscal consolidation to try and address those risks. And how do we address it? The recommendations we made in the report, one of which is boosting domestic revenue mobilization, boosting your capacity in public financial management so that you use the resources you get prudently and you are able to generate growth and improve the debt productivity, debt growth relationship, and not debt relationship. And in many countries, you find that you have debt relationship when you borrow short-term capital at high interest rates, and then you have to roll over, you borrow more, and it's just a vicious cycle.
Infrastructure development has been cited as a key ingredient for Africa's economic growth. What role is the AfDB playing to enhance infrastructure development across the continent?
If you take any country and look at big infrastructures that has been there, the roads, the rails, the power generation, and so on, you have the footprints of the African Development Bank in it. And every year, the African Development Bank invests, say, about 10 billion US dollars. I mean, of course, it fluctuates depending on the deal flow for that year, but then that's a huge contribution to infrastructure development on the continent. And we do recognize that our capital is small. It's not enough to fill the huge infrastructure gap on the continent that we estimate to be between 68 to over 108 billion annually. So for that reason, under the leadership of President Adesina, we have, as the bank has established, the Africa Investment Forum that is mobilizing tens and hundreds of billions for infrastructure development on the continent from both public and private investors.
Now, the AfDB's annual meeting will be held later this year in Nairobi. What can we look forward to at that meeting?
This report identifies structural transformation as a major aspect, and these issues about reforms of the global financial architecture. So without going into too much details, that annual meeting is going to be focusing on how to simply make Africa do that very effectively. And I have to really commend President Ruto and his team, the Cabinet Secretary, Professor Njuguna, my dear friend, for all the work they are doing to prepare for that annual meetings. It's going to be great.